CNBC contributor and fast money trader Tim Seymour is here on set.
It's
Hey,
great to be here on the exchange, though. I mean, this is fun stuff. This is talking gold with you guys here. I mean, what's better than
can't be better.
This is right on campus.
But you still like it. You still see upside. What's the catalyst here?
Part of this is leave the gold macro out of this. If you listen to Newmont, which is the largest position, it's the largest weighting in the gold index. It's 14% of the GDX. Listen to them and listen to what they're doing. They're selling off non-core assets, raising cash. They authorized a $6 billion buyback in July, and I think that's going to be significantly higher. So the operational leverage in these companies is extraordinary. I don't think the analyst community, and by nature, it's like a lot of things we talk about, things that are lagging, they have to catch up to the gold price. And I look at EPS targets for 26, and I am sure they're going to be better if we go sideways. I think they're going to be significantly better even if we saw a 10% pullback in gold. The macro around gold doesn't change. And that outperformance to the S&P over the last 3 years when all we do is talk about the stock market is pretty shocking.
From here, would you rather gold miners or gold?
Gold miners. And the reason for that is that, remember, when gold was rallying in the first part of this rally, the miners were really lagging because we had a big inflation push, and they were not keeping up with inflation. But I think, look at the performance of the stocks themselves relative to the metal, and that beta has been 2 to 3 times over the last month, or really the last 2 to 3 months as we've kicked this into high gear. I think you keep that outperformance.
I guess you say the macro around gold hasn't changed. And granted that the miners probably still have to realize some of the benefit of where gold has come to by now. But it seems to me the character of that rally changed a little bit. It kind of accelerated. It wasn't really dependent on dollar down. It wasn't really operating by a lot of the metrics that we got used to, right? I mean, it sort of felt like it had a life of its own.
Yeah, Mike, I'm not comfortable with this move in gold because this is an un-gold-like move.
Yeah.
And I do think that some of the key drivers of this are things that are more thematic than necessarily. I mean, we can get readings from China's gold reserves, and we can see they're at 10-year highs. We know their treasury holdings are falling. Those are things that are part of this equation. Inflation, you know it. But as we joke on the show, and I think Karen Feinerman does this a lot, she's like, give me any fundamental macro headline, and I can tell you, or people will tell you that's a reason to buy gold. And there's a little of that out there, but I'm a buyer.
Are we at a point now? I mean, you like gold, you like miners still, but there are other metals that are really showing some signs of life here. I mean, copper for one, aluminum is another, platinum. I mean, you name it. So should there be an additional allocation there to some of the other metals? How do you look at it in your basket?
Copper has been extraordinarily volatile, and some of that are just due to the technicals of the copper market and how it trades in LME and squeezes and futures contracts. But if you strip out some of that volatility, that same 3-year rally in gold is a great trend line in copper. And copper, which has fundamentals that are really more about supply-demand dynamics, long lead time on mines, a lot of the geopolitics, a lot of the global unrest, some of that just leads to copper disruption. The best ways to play that, to me, are the integrated miners. That's BHP, that's Rio Tinto. I own Freeport, and I think that's been disappointing, but picking it up. And I do think that the broader industrial metal space, obviously, if we get a growth scare, that's really difficult. China resurgence, especially for Rio Tinto, is a big deal. I'm not saying their economy is going to the moon. I'm saying a little increase goes a long way for those companies.